Are you getting an appraisal or are you getting an assessment? Over and over from clients, I get this. They think the appraisal is the assessment and the assessment is the appraisal. Today's video, I'm gonna break down in plain English. What is an appraisal? What is an assessment? And what is the difference? Hey guys, if you don't know me, my name is Jankowitz. I'm a local realtor based in Cambridge, Massachusetts. I've closed over 300 transactions in the last 3 years. Before I get into the video, please take a second to hit that subscribe button. If you guys have questions about appraisals or assessments as we're going through it, hit me up on my Calendly link in the description below or leave a comment. Now let's get into it. What is an appraisal? An appraisal, most commonly when we're talking Cambridge and Somerville, Massachusetts real estate, is something that is ordered by your bank. So you as a buyer are buying the property. The bank will send out an appraiser, and that appraiser is there to evaluate the property. Usually the only one who meets the appraiser at the property is usually the seller's agent, and the appraiser will quickly go through the property. They'll often snap some quick pictures. They might draw up a quick floor plan. If there are floor plans already there that the seller's agent created, they'll send those over to the appraiser. Then they're gonna slice up that property and dice in a lot of different ways, looking at the bedrooms, the bathrooms, the condition, the location. And from there, they're gonna compare it to other similar properties. So for example, if it's a two-family property, they're gonna look and find other two-family properties to compare it to. And ideally, they want something that's sold relatively recently. Most of the time, we're talking 6 months or less, and usually relatively close in a similar location, typically a half mile or less. So the next question you might be asking is, why would a bank be hiring an appraiser? And first, I should add a little caveat here. They're not usually the one hiring the appraiser. You, the buyer, are usually the one who's hiring that appraiser, even though it's benefiting the bank. So oftentimes you, the buyer, will actually pay the appraisal fee. Not always. There are some exceptions where the bank will give it back to you on closing, but an appraiser is in place there to protect the bank. And how does this work? Well, basically what happens is the appraiser is going to give their estimate of the true value of the property you're buying. Let's say you buy $1 million property and the appraiser comes back and says, whoa, wait a second, this is only worth $900,000. Well, the bank is going to hit pause, and that's going to be an issue because the bank wants to know if they're going to loan you $1 million between the down payment and the amount they're loaning you. They want to know for sure that the property is secured. So if you default on the payment and you're not able to pay your mortgage each month and they take the property back and have to sell it, they're going to be able to sell that property and get their investment back. Does that make sense? If you have a property that you're going to pay $1 million on and appraises for $900,000, well, what you're going to have to do is not only pay 20% off the $900,000 purchase price now, but you're going to actually have to make up that $900,000 to $1 million gap, that extra $100,000. You're going to have to pay in cash because the bank is going to assume that if they ever had to sell the property, they're only going to be able to get $900K for it. So that's the basics of appraisals. Now let's talk about assessments. Now, every single town assesses your property. So if you own a piece of property, whether it's a single family or a condo or a multifamily or commercial property, they want to understand what is the value of the property. Now, why do they want to understand this? Because a huge chunk of the budget for each town comes from property taxes. So for example, in Somerville, Massachusetts, the tax rate is $10.34 for residential property as of 2023. What that means is for every $1,000 in property value, you would be paying Somerville $10.34. I like to move over the decimals to place. So for every $100,000, you're looking at about $1,000, $1,034. So that can very quickly, you can kind of figure out what you're looking at in terms of property taxes each year that you need to pay Somerville in this example. So the next question is, how do they determine what the assessed value is? Well, it turns out they do this using an appraiser. So they're actually, these two terms, appraiser, assessment, they're actually tied together. In assessment, the value is determined using an appraiser. So the appraiser will come to the property. I think in Somerville, they come every 10 years, or if there's ever significant work done to a property, they'll come to the property. So basically what happens is the appraiser will come to the property every so often. Every town is a little bit different about what triggers an appraiser to come. Sometimes it'll be after maybe 10 years or whenever a property is sold. It will vary depending on your area, but the bottom line is the appraiser will come and they will determine value. That value will then be used to determine how much you are paying in property taxes. One thing to note, what I have found, at least in a lot of the towns I work, including Somerville, Cambridge, Medford, the vast majority of time, your assessed value will be significantly lower than the true market value. I can't tell you how many times I will see a buyer client tell me, well, the property is assessed at $750,000, so why don't we just put an offer at $750,000? That's just not usually how it works. I have found that when it comes to assessed value, at least again, the markets I work, they tend to be well below true market value. So you cannot really lean on these in terms of the true market value, but just understand that the assessed value doesn't necessarily equal the true market value. Most of the time, it's significantly lower. Now, one question I get asked a lot about when it comes to assessments is what happens if the town sends over their appraisal for the assessment and the assessed value, in your opinion, is too high? I frankly, again, usually find it's lower, which is a good thing. And most people aren't calling to say my assessed value is too low. But if you do think it's too high, there is a process. It's called the abatement process. So you can actually file a form and have someone come back out and potentially adjust that price. Again, most of the time it's in the other direction, in my experience, but there is a process. It's the abatement process. If you have more questions, feel free to comment below or ping me by text. I'm happy to help more. The next question I get is, okay, I have a $1 million property. I'm paying roughly $1,000 per 100,000. So it looks like I'm just going to be stuck with about a $10,000 property tax bill in Somerville every year. Is it as simple as that? Or is there anything else I can do to reduce this burden? Well, every town's a little bit different, but Somerville actually has something called a residential exemption. And in fact, they have multiple exemption types, depending on who you are, that can reduce your property tax liability. In Somerville, they have something called a residential exemption, which means if you're actually living in the property, which Somerville is trying to encourage more of, they'll give you a 35% reduction on that assessed value. So for example, if you have $1 million property and you're living in the property and it's your home and you file for the exemption, it does take a little time, caveat there, could take an extra year or so. I'll save the specifics for another video, but basically you could get a 35% reduction on that $1 million assessed value, bringing it down to say $650,000. So now instead of having a $10,000 roughly tax bill, you're looking at around a $6,500 tax bill. It's a pretty huge savings. Now there's also other types of exemptions in Somerville. There's a disability exemption, there's a veteran exemption, and there's a 65 plus exemption. So if you fall into any of those categories, you also could receive some kind of benefit, whether that's a discount on your taxes or delay in when you pay taxes and essentially borrowing on the amount owed until you pass away, for example. So there are all kinds of situations. A good realtor should be able to help you navigate this depending on your specific town. Every town is different. So it's really important to work with a realtor who understands the area you're working. Anyways, guys, I hope this video was helpful. I hope you now understand the key differences between assessments versus appraisals. And the next time that you're looking to buy, you're going to be a step ahead of your realtor. If you have any questions, hit me up in the Calendly link and I'll see you guys next time.